Good morning and welcome to AM Forex New York. Today is Thursday, November 1st. I'm Caitlin Sisney. The dollar rose against the euro, snapping 7 days of losses. On speculation, the Federal Reserve may have finished lowering interest rates. Euro is trading at 144.19. The pound extended its drop from a 26-year high against the dollar after a private survey showed UK manufacturing expanded at the slowest rate in almost a year in October. Sterling is trading at 207.91. Meanwhile, yen is trading at 115.7. Today we're joined by Sean Osborne from TD Securities. He'll explain why he thinks the dollar is still vulnerable.
Well, we've seen the dollar start off a little bit firmer overall this morning after the U.S. data, GDP and ADP employment survey yesterday, along with the Fed meeting. The Fed rate cut very much anticipated by the markets, and although the dollar did sell off quite aggressively after the Fed decision, we have seen a small stabilization overnight. I think some of the European markets are closed today, so that probably is limiting the overnight price action in the dollar to a degree, but I'd say overall the dollar still looks pretty vulnerable here. We may well see a short-term correction in euro-dollar. I think if we can push below the 144 area today, we will perhaps see a bit more of a correction lower in euro-dollar, maybe back down towards the 143, the low 143 area. Ahead of the payroll figures, but I think it's more of a consolidation move likely than anything else. And as I mentioned, overall, I think the dollar does look pretty vulnerable here. The dollar sold off on the back of some pretty positive data reports yesterday, and the suggestion from the Fed that there won't be any more rate decreases to come. So the momentum here still appears to be quite negative overall, and I think that lower levels for the dollar still look quite likely as we move into the end of the year. For today, we'll focus on equity markets. We've seen a bit of negative reaction in equity markets in the overnight markets. We'll have to wait and see if that spills over into Wall Street. We'll also be looking at the spending data from the US this morning to give us more of a handle on where the economy is. But essentially, the focus there is it's limited, given that the Fed has already cut interest rates and essentially told us that they won't be moving rates again for some time.
That was Sean Osborne from TD Securities. I'm Caitlin Sisney. Join us again for another update right here on ForexTV.com.